Hey, good morning. It's Rob from Harlem Lofts. September the 3rd, we're going to do our market report or our market update through last night, September 2nd. Who are we? Harlem Lofts. We've been focusing on Upper Manhattan since 1998. We are located at 272 Lenox Avenue, also known as Malcolm X Boulevard, right at 124th Street. So come and visit us, make an appointment. We have a COVID-free office, a COVID-compliant office. If you want to know more about us, go to harlemlofts.com, follow us on social media. We have a new Facebook group called Coming Soon. So if you want to Google Facebook Coming Soon, or at the end of this video, we'll have a link. That's all of our properties that are off market as we're getting them ready to hit the market. And it's a private Facebook group. We also have copies of all of our market reports for the past 10, 12 years. We've been doing this for quite some time. And our next market report will be a webinar. We do them quarterly, and it'll be very early in October, first week of October. So that data that you see in the market reports is cleaned up right now. What we're doing is in real time, we're doing market updates as far as like what has sold. The only difference in these two market reports versus a market update is there is a delay in closings, especially with condominiums. So we're talking in real time, but when you look at our market reports that we put together in October, we wait a few weeks and then publish them. So that's accurate data. So let's jump to, we're going to talk today about condominiums in Upper Manhattan, townhouses, and I'm going to touch on rentals. Some interesting stuff happened on rentals. So let's jump to it now with the condo market. All right, condominiums. Condominiums from March 15th to September 2nd in comparison to 2019. We have chart number 1 will show you in blue, it's 2019 number of sales. Recorded sales. Again, this differs from our market reports. You'll see the third quarter in October, we'll have a webinar. This is as they're recorded, and then it changes slightly because of the delay in recordings. But we had 141 properties closed between March 15th and September 2nd in 2019 in blue, and then in red, you'll see 58 properties closed, and it's by week. Now, the sales volume has been a little off on the condominium market. Right now, the sales volume is down. The number of sales is down 58.9%, and the sales volume is down 59%. So they're both 59%. So what that means is, unlike the previous 8, 9 weeks, 10 weeks, maybe even more, the sales volume indicated that the average sale price of the properties, condominiums in Upper Manhattan closing, was much less than the average last year. When you see the sales, the number of sales and the sales volume at the same discount, percentage discount, that means that the average price of the condominiums that are closing or recorded closings in the last 2 to 4 weeks is the same as last year, 2019. So that could mean that, well, right now the average sale price is from 2019 was $918. The average sale price of all condominiums in Upper Manhattan was at $918,000, and then this year it's $915,000, based on the data that we have from the past 2 to 4 weeks. So what that's telling us, I can tell you that we talked about how many condos were hitting the market since we've reopened. It's been an average, not counting the big buildings that, sometimes dump, 20 at a time. It's been an average of 2 a day. But if you look at the closings are 2 a week. If you look at the chart in red. So inventory is so high on the condominium market in Upper Manhattan right now that some of the research sites that we use are capped out. So if you are a buyer for a condominium, you have plenty to choose from. It looks as if the sellers have stopped selling at discounts based on the average sale price being the same as last year. So it's going to be a very interesting market going into the winter with so much inventory in the condo market, and buyers seemingly wanting to hold to their price, the 2019 number. We've been through these things before. We've been through 2000, 2000 or 9/11. We've been through 2008. It looks to me like the recovery is anticipated based on the activity that we see, that we're going to get out of this. I don't know how long it will be, but the numbers are showing that the recovery is here, the inventory is back, and the numbers of the average number of the sale prices are similar to 2019, although it's a lot, there's fewer. So hopefully that helped you on the condo market. It's going to be Labor Day weekend, and then after that, we do expect another surge of new listings. So we'll talk to you in a couple of weeks. Have a good Labor Day, and let's talk about townhouses. All right, townhouses. A shout out to the research department at Harlem Lofts. They are really getting this down pat. So here's what we have for you today. Number of sales from March 15th to September 2nd, last night. In 2019, we had 38. In 2020, we have 19 that are recorded closings. Sometimes there's a slight delay, so these reports won't be as accurate as our market reports that you'll see in October each quarter. So that's a 50% decrease in the number of properties, townhouses in Upper Manhattan that have sold this year compared to last year during this COVID time frame specifically. Again, what's key about that is the sales volume. So chart number 2 will show you that in 2019, sales volume of the properties that closed was $79.4 million. If you look at the red, 2020, the sales volume total from March 15th to September 2nd is 43.8 million. So because that is less than 50%, that means the average price of the townhouses that did close is going to be higher than it was in 2019. That's kind of an anomaly here. So to be more specific, last year the average sale price during this period was $2,090,000. This year, the average closed sale price of the townhouses in Upper Manhattan is $2,300,000. So go figure. That doesn't match what you would think it would, but the townhouse market is still holding solid. So let's talk about what's on the market and what's happening with that, because that is going to be, when they start to close, that's going to show you the real effects of COVID. So what we have on the market, chart number 3, we have 83 properties on the market. Remember back in March when we had 55, we had 60. I'm going to show you a chart in a minute that shows the recovery is here, meaning the inventory has come back. We're still a little shy, about 8 to 10% shy of where it was last year as far as the amount of properties that should be on the market right now. But 83 is definitely showing a sign of recovery, and this is before Labor Day. Normally it's after Labor Day. So out of those 83, you have 11 over 4 million, you have 20 between 3 and 4 million, you have 35 between 2 and 3 million, you have 17 under 2 million, which is a lot for under 2 million. Now, those properties are discounting them. The biggest discounts have remained between the 2 and 3 and the 3 and 4 million dollar range. So if you look at chart number 3 in the orange, you'll see that the largest number of discounts are in orange. That's the property owners that have them listed between 3 and 4 million. 50% of those property owners, if you look at the orange all the way to the right, are discounting their properties. If you look at the green, that used to be the largest number of people discounting or sellers discounting, but that has been reduced now to about 35%. So 3 to 4 million is the most number of discounts. And then the next chart, chart number 4, is going to show you the percentage of those actual discounts. So if you look at this chart number 4 that'll pop up behind me, you'll see the 2 to 3 in green, the 2 to 3 million range. They were discounting at 15% consecutively up until kind of the reopening. And then now those property owners are only discounting their properties about 5 or 6%. So And also out of the orange line, the 50% of the $3 to $4 million properties, there 50% of them are discounting. But if you look at the orange line on chart 4, only by about 6% as well. So 6% seems to be the discount range of the middle market where most of the activity is. So the big chart this week. Well, let me tell you this first. We had. How did we get to 93? How did we get to 83 properties? Well, 9 new listings hit the market in the last 2 weeks. One of those was recycled up at 6 Hancock Place, and the others are actually new listings. Let me show you the chart here. If you want to look at this chart, you'll see that the climb started with the amount of properties that are listed right at June 22nd. If you look at the chart, we started going up. So we were at 60, 61. Now we're at 83. Last week we were at 81. So the difference there is we had 9 new properties, again, hit the market. 1 was a relisting, 8 are real new listings. We had 3 properties. We had 4 properties that were delisted. They were taken off the market in the past 2 weeks, and 3 went into contract. So we only went from 81 to 83. But the activity is 3 in contract, 4 pulled off, 8 real new listings hit the market, and 1 recycled listing. So that means that a lot of the sellers are getting a jump start on this after Labor Day pushes normally, and they're getting on the market now. So we don't usually see 8 new properties the weekend before Labor Day. So with 83 properties on the market, I think that you can conclude there'll be more after Labor Day. Normal, as I've always said, is around between 94, maybe 100. So I think we're going back to some normalcy from an inventory standpoint. And the number of properties going into contract, our firm, we have 3 that are in contract, and there's 3 additional ones here in Upper Manhattan. So with 6 in contract that we know of and 83 on the market, the activity is definitely returned. So we're looking for a nice Labor Day weekend. But the following week, we have probably 16 open houses scheduled. So if you're in the market, this is the time with this amount of inventory to get that trophy property that you've always wanted. All right, so that's our condo and townhouse market report for this week. Again, September 3rd, data through September 2nd. We'll be back in 2 weeks, and that will be after the Labor Day holiday. Let's talk a little bit about the rental market because we missed that. The rental market had an interesting happenings this week or this last 2 weeks. Students did come back, hopefully to go to to classes partially online, but they did move back to New York to find that some of the dorms were shut down. So the rental market was on fire for the past 2 weeks. If you have a 1 or 2 bedroom that did not rent in the last 2 weeks, you need to get it rented now because there are students waiting in line for rental units. So that was the interesting point. We don't focus on rentals. We maybe have 10 or 12 at a time, but we pretty much rented them all, I think, in the last 2 weeks. So go to our website if you want to see more about the rentals that we do still have available, if there are any. And you can also go to our website to get these market reports. You can get our market, all the charts that you see. You can download those, follow us on social media. And we have a new Facebook group. It's not super new, but it's becoming more popular. It's Harlem Lofts Coming Soon Properties, and that's a private Facebook group that is all of the properties that we are listing. We kind of put it up there first while we're getting all the information together to launch it. So if you're interested in townhouses, check that out. We may have a condo coming soon Facebook, maybe in December, but right now it's just townhouses. Anyway, so Labor Day weekend is coming up. I'm going to close the office early. We're going to take the weekend off, and we will see you 2 weeks later to report on what happened after Labor Day. Have a nice Labor Day and stay safe. Thank you.